Last but certainly not least, we will hear from Roger Robertson, who is a commercial account relationship management with the Bank of Montreal in Wingham. Roger grew up on a beef feedlot and backgrounding operation in Woodville, Ontario. He graduated from the University of Guelph with an animal science degree and then packed up for Alberta, where he worked as a ranch hand on a 900-head cow-calf operation. From there, he was employed as a farm manager for Alta Genetics in their cattle embryo division. Still in Alberta, Roger was then hired on with TD Bank into their agricultural manager training program, and later as an agricultural account manager. In 2007, Roger and his family moved back to the Wingham, Ontario area, where they still reside and farm today. So after 3 years with TD in Wingham, Roger was hired by the Bank of Montreal as an account manager, primarily dealing with small business, agricultural, and commercial accounts. Now he primarily works out of Wingham, but also works out of a number of branches extending from Owen Sound down to the London area. Roger currently works as a commercial account relationship manager with the Bank of Montreal, but his primary skill set is with agricultural and farm accounts. Roger values his farming and agricultural background in understanding where his clients are coming from. And certainly this was something that was valued by Brent as well as he pursued speakers for this panel. Certainly Roger came highly recommended. So welcome, Roger, and turning it over to you.
Thanks so much there, Megan. And I want to thank you for the introduction. And I want to thank Brent for inviting me onto the panel here. It is certainly humbling to be involved with such a panel of guests here. And I just want to state that to all of the participants in this webinar tonight, you know, this is kind of my point of my presentation, is that take advantage of the sluggers, the heavy hitters that you have in this industry, the experience and the information that you'll glean from these type of people. That's an important part of your risk management in your business here today. And if you can just advance to the next slide there, please. And I won't take up a whole lot of your time here tonight, but what would a speech from a banker be without a whole lot of questions? So that's my first slide. It involves quite a bit of questions of if we're looking at your working capital on your business, and how do we deal with that, and how do we improve that? What does that mean? And how do we look at all of the pieces of information that we're getting, not only from our business, but from the industry and the economy in general? What does that mean for your business? So we'll look at a kind of a general definition of working capital. And when we look at the risk, we'll look at how to mitigate those risks. And you heard from Dale there before, as he looked critically at his operation, identified those risks. Those were his topics that he brought forth. But looking at each of your operations and what is a risk and what can you do about that, if you can do anything about that. A little bit of brief description of where our current economy is at. And then when we're looking at the economy, the industry, how do we marry that with your business, and how do we make your business best and most efficiently operate to produce the best result? And from a banker, that's retention of profits. That's increasing the profitability of your business. Next slide, please. Essentially, working capital is just your current assets minus your current liabilities. Your current assets, anything that's liquid that can be turned into liquid within that coming year. Those, the inventory, the cattle that you're utilizing. You know, it could be your feed if you're selling it, but your feed is an asset that you're going to be utilizing to fortify your inventory. So you have to be critical with your current assets and your accounts receivable. All of that, how can you turn that over to meet any of those obligations that you have coming at you in the coming year? And you've got to meet, you know, those your payments, your your creditors, where your operating line of credit is at. And the goal is to make your current assets greater than your current liabilities. Simple as that. There will be times when that working capital is not positive, and you have to be aware of that. And that's why we're asking you to, have a critical look at your operation and plan ahead, and to be just to be wary of where your operation is going. And there'll be times on when that isn't positive. How do you get through that? And so to ask those questions ahead of time is paramount in your success in long-term stead in the industry. Next slide, please. Risk, just a brief little laundry list of risk. It's you being critical and being honest with your business. Anything that can adversely impact where you want to go with your business. And it's important that you have goals with your business and that those are readily identified by not only you, but all of your management. And this is not an exhaustive list. Weather, cattle commodity prices, crop commodity prices, consumer trends and conditions, exchange rates, government policies, family dynamics. There's nothing worse for the balance sheet than a divorce. So you have to be honest with what's going on and how to best protect your business. And of course, management is that factor that will help you get through adverse impacts of all the other risks too as well. They're all critically important, and all critically important for you improving the bottom line of your business. Next slide, please. So the idea is to bolster your working capital by retention of profits. It's as simple as that. There's some simple ratios that we like to see when we evaluate a business. Having a current ratio above 1.5 to 1. So 50% more current assets than current liabilities. That extra 50% will allow you to have some cushion for when things aren't so rosy. And retaining those profits and building that into your business will allow for some long-term sustainability because we do operate in quite a cyclical business that isn't kind sometimes. And retention of profits, your debt servicing, your earnings before the interest, taxes, depreciation, and amortization, divided by the principal and interest that you have for that coming year. If that is greater than 1.25 to 1, then that's an ideal scenario. There's been, you probably have experienced that, depending on your leverage, experience greater than that in the last couple of years. Well, what are you doing with those profits? And how best are you investing in your business? And when I say investing in your business, it isn't necessarily just buying something. Hopefully you've had a critical analysis on what you've purchased. And in our discussion here tonight about bolstering working capital, hopefully those profits are just sitting with your business to help provide that cushion for when those times are that the price that you're given for fed cattle isn't going to let you get out on what you've got into it. Next slide, please. I'm not an economist, but the Bank of Montreal does have an economics department, and they do release an ag update on a quarterly basis. And one just came out this week, and I won't go into too much in the weeds of it, but it's just important when we're talking about identifying risks. It's important that you get a broad scope of all of the risks that are on the go. And we're not bigger than the market. We're not bigger than the economy, but there's things going on in the economy that do have a direct impact on your pocketbook. And you know what, this is just one example what Bank of Montreal has put out for growth in the economy, what's coming up, and what they've seen, you know, what interest rates are going to be doing. There's a interest has risen quite substantially. It's had an impact on everybody's bottom line. There's potential that there's some relief coming through this year and next. The Bank of Canada hasn't necessarily suggested that, because the very words that the Bank of Canada use are analyzed and scrutinized in detail. But they have to wait for inflation to be pressured down a little bit more before they're going to come out with a statement that says that they're going to cuts are on the horizon. But the markets and most economists are looking towards that 1% to 2% cut in the overnight lending rates from the Bank of Canada, the overnight indicative rates for the coming year. Again, energy prices, exchange rates. Next slides. And again, they've gone through the crop sector. And if anybody wants to look at this in more detail, I'd be happy to provide them with the detailed reports. Next slide, please. Again, going through all of your risks and what the economy is talking about, where prices, costs, and supplies are at. Daryl talked a little bit about the supply and where is that forecast to be going. Next slide, please. And in conclusion, just be honest with your business. Be honest with where your business works, who you work with, what it looks like, where you are in amongst your peer group. Don't be afraid to ask those questions. There is no such thing as a silly question. And so if you're going to gain anything from this webinar here tonight, it's surrounding yourself with support and you know, asking those questions so that you can be a better business. And you know, I couldn't help but at the end making sure that you put a plug in for the banking sector. Make sure that your banker is your partner. This is a very capital intensive industry, and your banker is your lifeline to provision of that capital. In an inflationary environment where we've have been, capital has become more restrictive. So it's been more paramount than more than normal for that communication to be with your banking partner. And in conclusion, I just want to say that for all the years that I've been involved in this interface with the public, I want to say that I've discovered that no matter what facet of life you come from, or culture, or industry, there's three types of individuals that operate in this world. There's those that get it, and they're a pleasure to work with because they're asking questions, they know where they're at, and they want to go further. And there are those that don't get it. And they're also a pleasure to work with because more often than not, they know that they don't get it and they want to do better and they're asking questions. The third group is those that think that they get it, but they really don't get it. They're not asking questions. The blinders are on and they're sitting on their laurels. And they're going to be the ones that either get pushed out, pushed down, they won't improve. But they're very difficult to work with because they're not listening and they're not asking questions. So thanks there, Megan. Appreciate the opportunity.